Assalamualaikum warahmatullahi wabarakatuh. My name is Nasrin Sraya binti Ahmad Saiful Nazif. My matrix number is A2280901. Today, I will talk about our case study, starting with question number 1. Prepare the journal entries to record the expenditure incurred subsequent to the acquisition of building in 2020 and determine the new cost of the building. The journal entries are: on 2020 March 15, expense is debited while cash is credited with the amount of 1,750 ringgit. On May 15, building is debit, cash is credit with the amount of 530,000 ringgit. To determine the new cost of the building, the cost of the building is 5,287,047 ringgit. Add additions to the building 530,000 ringgit. Add repairs expense 1,750 ringgit, and the total of it will be the new building cost of 5,818,797 ringgit. Question number 2. Calculate the new annual depreciation for the building after the replacement made in 2020. First, we have to find the old depreciation, which is 581,879 ringgit 70 cents, and we round it to 581,879,000 ringgit for the depreciation expense in 2018 and 2019. Then we find the new amount of building by adding the new building cost and adding the replacement in 2020, which is the 150,000 ringgit, and it will have the new amount of building, which is 5,968,797 ringgit. Then we can divide it by 10, which is 8 plus 2 years, and we can get the new annual depreciation in 2020, which is 596,879 ringgit. Next, we have to prepare the journal entries to record the revaluation of the building at the end of 2022. First, we have to find the accumulated depreciation of the building. This is by adding up all of the depreciation expense of 2018, 2019, and 2020. Then, we can prepare the journal entries of debit depreciation expense and credit accumulated depreciation. And the amount is 1,760,637 ringgit. Then we can find the revaluation surplus by finding the carrying amount first. The carrying amount is the new amount of building less accumulated depreciation. Then we can take the fair value and less the carrying amount. Then we can get the revaluation surplus. The journal entries is debit revaluation surplus, credit other comprehensive income with the amount of 1,391,840 ringgit. Question number 4. We have to prepare the journal entries to record the disposal for part of the building at the end of 2023. The first journal is debit depreciation expense and credit accumulated depreciation. The second one is debit disposal of building and credit building. And the third journal entry is debit cash and credit building and gain on disposal of building. The calculation is as follows. The disposal of building is 4.8 million times 1 over 4, and we can get the 1.2 million, whereas the gain on disposal is by cash less the disposal of building, then we can get the gain on disposal, which is 150,000 ringgit.
Calculate the amount of interest to be capitalized in 2020 and prepare the related journal entries. Actual expenditure 474,400 ringgit. Weight average accumulated expenditure 227,000 ringgit. To calculate avoidable interest, 227,000 ringgit times 8% and get 18,160 ringgit. To calculate actual interest, 400,000 times 8% times 9 per 12 and get 24,000 ringgit. For journal entries, warehouse is debit, which is 18,160 ringgit. Interest expense also debit 5,840 ringgit. Cash credit 24,000 ringgit. Calculate the amount of interest to be capitalized in 2021 and prepare the related journal entries. Actual expenditure for 2021 is 542,560 ringgit. for weighted average accumulated expenditure, total is 82,093 ringgit and 33 cent. To get avoidable interest, 82,093 ringgit and 33 cent, which is weighted average accumulated expenditure, will times by 8% and get 6,567 ringgit and 47 cent. Actual interest 400,000 will times by 8% and get 32,000 ringgit. For journal entries, warehouse will debit for 50,000 ringgit and cash will credit 50,000 ringgit in 1 March 2021. Also in 1 March 2021, warehouse will debit 6,567 ringgit and 47 cent. Interest expense will also debit by 25,432 ringgit and 53 cent. And cash will credit by 32,000 ringgit. Analyze whether the company should report an impairment loss of 100,000 ringgit. Carrying amount of machine 68,500 ringgit. Recoverable amount 75,000 ringgit. Carrying amount is lesser than recoverable amount, so the company should not report impairment loss. Explain how the government grant received in 2022 need to be reported. Cash will debit 2 million ringgit and dividend income will credit 2 million ringgit. To get grant revenue, 2 million ringgit will divide by 5 years and get 400,000 ringgit. 400,000 ringgit will reported in current liability at the end of 2022 in financial statement. Different grant revenue, 400,000 ringgit will time 3 years and get 1,200,000 ringgit. 1,200,000 ringgit were reported in financial statement at non-current liability.
What is net receivable value? Net receivable value is the estimated selling price in the ordinary course of business less the estimated cost of completion and the estimated cost necessary to make the sales. For example, marketing, selling, and distribution costs. Explain her confusion on the reason on the values of inventories that may be less than cost. The net receivable value of inventories may be less than cost due to a decision being part of company marketing strategy to manufacture and sell product at a loss. When inventory calculated as the lower of cost or net receivable value, it is adhering to the accounting concept of conservatism. The goal is to lower the carrying value of products so as not to inflate the income statement, even if net receivable value may be the most drastically lower valuation for inventory. Revaluation model, fair value at revaluation date minus subsequent accumulated amortization minus subsequent accumulated impairment. Meanwhile, cost model, cost minus accumulated amortization minus accumulated impairment. Prepare journal entries necessary to record the cost of the patent, amortization expense, and increase in market fair value of the patent in 2021. Cost of the patent in 2021 is 6 million for debit patent and credit cash 6 million. Entries for amortization expense is amortization expense 6 million divided 5 years and get 1,200,000 in debit and accumulated amortization 1,200,000 in credit. And for increase in market fair value of the patent in 2021, accumulated amortization 1,200,000 and patent 4 million get from 10 million minus 6 million in debit. There will be unrealized gain on revaluation for 5,200,000 in credit, where 10 million of revalue minus 6 million of cost of the patent minus amortization expense 1,200,000.
For question 11, prepare journal entries necessary to record the cost of the patent, amortization expense, and increase in market fair value of the patent in. For the first entries is we debit patent for RM2 million and credit cash for RM2 million. For the second entries is we debit amortization expense RM 2,500,000 and we get it from RM 10 million divided by 4. And we credit accumulated amortization for RM 2,500,000. And the last entries, we debit unrealized gain on revaluation RM 3,900,000 and we get it from RM 5,200,000 minus RM 1,300,000. We also debit accumulated amortization RM 2,500,000 and they also debit loss on impairment RM 1,600,000 and we credit patent for RM 8 million, which is we get it from RM 10 million minus RM 2 million. For question 12, prepare journal entries necessary to record the cost of the customer list and amortization expense in 2022. So for the first entries, we debit customer list RM 560,000 times 0.4, which is RM 224,000 and credit cash RM 224,000. And the second entries we debit amortization expense, which is RM 224,000 times 10 divided by 12, which is RM 186,667. And we credit accumulated amortization RM 186,667. For question 13, discuss whether the director's view about the amortization and impairment test of the trademark is in line with the requirement of MFRS 138 intangible asset or not. Uh, so the answer is the director's view about the amortization and impairment test of the trademark is not in line with the requirement of MFRS 138 intangible asset. It is because, based on the requirement of MFRS 138, impairment test should be conducted if there any indication that the intangible asset may be impaired. An intangible asset with indefinite useful life you should not be amortized. Therefore, the trademark should not be amortization and impairment test because it didn't meet any requirement of MFRS 138.
For the question 14, prepare the journal entries necessary for the trademark in 2022. So this is how to prepare the journal entries for trademark. Debit trademark 250,000, credit cash 250,000, debit amortization expense 25,000 and credit trademark 25,000. Discuss whether Pinewood Berhad should conduct an impairment test for the trademark on 31st December 2022. Pinewood Berhad doesn't need to record amortization expenses for the trademark because the trademark has indefinite useful life. Pinewood Berhad does not need to do an impairment test for the trademark on 31st December 2022. Indefinite life intangibles must test for the impairment at least annually and whenever there is indication that the assets may be impaired. The director suggests that they only need to conduct an impairment test when the trademark is renewed, which is every 10 years. For the question 15, determine the amount of goodwill recognized. So how to get the goodwill is net assets plus monetary liabilities minus building minus equipment and also minus inventory. So the amount of goodwill is 200,000. If any, on 31st July 2022 and the impairment loss, if any, to be recorded on 31st December 2022. So how to get impairment loss is recoverable amount minus carried amount. So we get 400,000. So this is how to prepare the journal entries for the impairment loss. Debit loss on impairment, which is the amount is 4,000 hundreds and credit is accumulated impairment 400,000. For the last question is question 16. Explain why the company's senior accountant
stating that the accounting treatment suggested by the company BOD in allocating the divisions impairment loss is not in accordance with MFRS 136 impairment of assets, determine the correct allocation of the impairment loss. According to MFRS 136 impairment of assets, an asset should be considered impaired when its carrying value exceeds its recoverable amount for a cash generating unit to which goodwill has been allocated. The goodwill allocated to the cash generating unit and all other assets in the cash generating unit on a prorated basis should be allocated the impairment loss amongst the assets in the cash generating unit in the following sequence.